Well, it makes you really wonder who really owns your money, doesn't
Yeah,
it?
supposedly your money, right? You,
I've asked that question many times when I've gone into the bank, when they've explained to me the bank's rules, because I will often look at the teller in the face and just say, "It is still my money, isn't it?" And they often get quite offended when I ask that question, but I manage to say it with a very serious face when I do, and they find it quite offensive, and I don't mind asking the question.
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Reluctant Preppers provides educational awareness and commentary only. Opinions expressed do not constitute personalized financial advice. Viewers are encouraged to do their own research and seek qualified personal financial consultation before making investment decisions. Welcome back, Reluctant Preppers. It's with great anticipation that we always look for this returning guest. Rob Kirby, proprietary analyst, is here with us again on Reluctant Preppers. Rob, thank you for joining us.
Pleasure to be with you again, Dunnigan.
Whenever we tell our viewers that we're going to have you back on, we get flooded with this list of questions for you. I know we won't be able to make it through all of them, and so I wanted to get started towards that. But first, I wanted to give you a chance to give us your view of what's going on with this major breakout that's happened in the gold market. And I wanted to first lead that off with a personal anecdote, because after our last interview, you and I were talking a little bit privately about ways of accumulating precious metals and maintaining your privacy and your secrecy about that. And so I did something I've never done before. I actually, I've purchased all of my metals online through various online brokers, and my subscribers will know that they've heard enough advertisements for SD bullion that they know that's one of the ones I use a lot. I used others as well, but this time I tried going into a local coin shop, and I tried taking cash. And I thought I called ahead. I made sure they had the stuff. Actually, that was another point, because another local coin shop said that they were completely sold out of gold and silver. I thought that was an interesting data point. And so I went into the one that said that they had plenty in stock, and I was able to purchase some product. And then I went back in today, the next day, and they said, "Oh, you were in here yesterday. Yeah, we can't sell more to you right now. You have to wait more than one day." I said, "Well, what? I thought you said it was every 24 hours." They said, "Yeah, but because the way that we don't write the time on our receipts, it's actually going to have to be 2 business days when you come back again." So I thought about that. I thought, man, if you were trying to do something of any significant size, it could take you weeks or months, depending on what you're trying to do. And which sounds like to people, so what? So you got to drive across town a few times. Be patient. It's like, yeah, that's easy to say, but in a fast-moving market, that can mean just being totally left out or left in, and when you want to get out. So can you talk to us first about the reality of that?
Yeah, well, the reality is, and you and I have spoken about this, I think, quite a few times over past interviews. When the crap really does hit the fan, which I believe it's guaranteed that it will, timing is still a little bit tricky, except it's probably coming a little bit better in focus now with the trade war between China and the U.S. heating up ever more every day. But there's going to come a point in time, I believe, when you're not going to be able to buy metal, physical metal, which is why we've always discussed and talked about the requirement or the need to be pre-positioned and have your physical cash on board before the proverbial brown stuff hits the blades, because it's going to become very difficult, if not impossible, to procure when there's absolute calamity and when there's blood in the streets and the equity markets, and there's quite a breakdown in the financial universe. It's going to be very difficult to buy physical precious metal, if not impossible.
One
So,
quick
yeah,
clarification. You said have your cash on hand. Did you mean have your precious metals on hand, if that's what you want to, if
yeah.
that's what you're going after?
What I'm talking about is having your cash of precious metal.
Your
Your
cash.
supply.
Cash with an E. Yes. Okay.
Yeah, yeah. So you need to own it, because even though I still believe that a crypto solution is going to be force fed to humanity in the near term, ultimately the end game is you're going to need to own, and you're going to have to own, physical precious metal to maintain some semblance of your wealth, assuming you still have some. And that's going to require you owning physical precious metal in large part. And, people who think they can time it perfectly and buy it the day before it becomes unavailable might be very, very, disappointed when the day comes. And instead of pulling off the master stroke of buying it all at the last minute, you might find that you can't get any. So, it's very, very prudent to think ahead where precious metal is concerned, especially physical precious metal, and have some on board now, and and play it accordingly, and maybe add to a position over time if your resources allow you to do so, and build a position, or make sure that you at least have a position if it becomes unavailable, which I think that's an inevitability that this will in fact occur. And it's interesting that you're coming to grips with this right now in your personal life. And, it's a good point to make to others, just to realize that just because metal has been available does not mean it will always be available, period.
And I'll add to that cash and access to your cash, because that's both at the bank where I went to make the cash withdrawal, and I had to be careful about the amount that I made there in order to make sure that it didn't trigger any special reporting and that sort of thing. But then when you want to take that to the coin shop and make your purchase of metals, then they're subject to other reporting restrictions. And the guy was very polite and very apologetic. He said, this is just, we have to comply with these regulations. They got put in after 9/11, and it thought, all it would take, this is the regulations as of today, which are more restrictive than they were in the past. Access to your cash and the ability to use your cash, either way. But that's today. All it would take is one little strain, one little situation, and all of a sudden, now we're in code yellow again, and or orange or whatever. Now we got to tweak the rules, and all of a sudden,
done again. My bank in Canada, which is Toronto Dominion Bank, most people would be familiar with the name, I believe.
Yeah.
I have a withdrawal limit of two and a half thousand Canadian, and if I want more than 2,500 Canadian, I have to request the money and wait 3 business days to obtain more than 3.5 or 2,500 in cash. So
of your supposedly your own funds, your own.
Exactly, and that's a hard and fast rule. Now, that's not to say I can't go into the bank and get a bank draft. But, a bank draft isn't the same as cash. So, and a lot of physical precious metal trades on a cash basis, not on because I know dealers that I talk to and have dealt with in the past. Even if I go in with a bank draft, I have to wait 7 days to pick up my metal. So if I walk in with cash, I can hand the cash over and walk out with the physical metal on the spot. So, these are all issues that people should bear in mind if they think they're going to get cute in making their initial purchases or substantial purchases of physical metal as time moves along. Because if you haven't been paying attention, the financial landscape is getting a lot more challenging with each passing day than it was weeks and or months ago.
And augmenting that further is we've been speaking with Australian economist John Adams, who talks about the $10,000 and above transactions are going to be made illegal entirely, not just reportable, but illegal in Australia, according to a proposed bill that's in their parliament right now. And the public comment period ends next Monday, the 12th of August. And he says there's just been absolutely inadequate public notice of this, and there's been inadequate time for people to really be aware and informed about what's happening. But that's not bad enough is that they're combining that with the plans to go to deep negative interest rate policies as recommended by the IMF of an additional, say, 5 to 6% below where they currently are, which might end up being -3, -4, -5% of negative interest rates. So if you're essentially hurtling us down this path to where you won't be permitted to make any significant use of cash, so you've got to leave it in the system, and it's going to be basically bailed in away from you to the tune of negative interest rates up to 3, 4, 5% negative. It's really sobering as far as what.
Well, I find it very sobering, Dunnigan, that people used to say one of the big reasons why statists or people who shill for the status quo would always say to me, well, why would I want to hold physical metal? It doesn't pay any interest. Well, my response to them is enjoy your government bonds with their negative yields, because not only do they not pay interest, they steal from you. So I'll take my chances with the physical precious metal anytime. Anyway, that's just anecdotal, and just wanted to throw that in there because it's my long overdue jab at the people that claim that metal is not a good investment because it doesn't pay interest.
So I just have to share with everybody that I, again, had this, I guess it was just a punch in the face today through this experience I went through of feeling like I thought I grew up in a free country, and now I'm being told you can't do what you want with what you supposedly own and have any semblance of privacy about it. You'll if you want any sense of privacy, you'll conform to these restrictions, and those restrictions can be changed at any time. It's just very, very angry. I was telling my wife at supper, I'm so angry about this, and that's just the way it is.
Well, it makes you really wonder who really owns your money, doesn't it?
Yeah, supposedly your money, right?
I've asked that question many times when I've gone into the bank, when they've explained to me the bank's rules, because I will often look at the teller in the face and just say, "It is still my money, isn't it?" And they often get quite offended when I ask that question, but I manage to say it with a very serious face when I do, and they find it quite offensive. And I don't mind asking the question. Let's put it that way.
People, if you look back on our channel, you'll see that a few weeks back we interviewed Will Lear from Perpetual Assets, and the title of that one is "Nothing in the Bank is Yours." So it is sobering. If you have any other thoughts, we'd love to hear them before we get into viewers' questions. Otherwise, we'd plunge ahead.
Well, I mean, let's plunge ahead and see what the questions bring, and let's see where it takes us.
Very good. So, Sinclair asks, does Mr. Kirby agree that rates can spike in a very, very short time and wreak havoc in the full spectrum of the financial world?
It depends in what jurisdiction you're in. I don't think rates are going to be spiking anytime soon in America. But I mean, if the world were to turn their back on the dollar, might the Fed in a complete panic try raising the discount rate or trying to raise rates? I mean, I'd put nothing past these people. I mean, listen, when you really think about it, you've had 4 chairmen of the Federal Reserve in the last week write an op-ed in the Wall Street Journal saying that America and the world needs an independent Federal Reserve. Well, I'll tell you something that really stuck in my craw when I read that commentary. Like, if the world needs an independent Federal Reserve, then us the lumpen need some explanation where the missing 21 trillion is. And these people who talk about being authentic and transparent have offered the world or Americans any premise of transparency, decency, honesty, humanity in their dealings throughout the years. And all I can say is they've got a bloody nerve to be making such statements in light of their most recent actions, because and I don't even want to get into the chicken egg argument of whether it's the U.S. Treasury or the U.S. Federal Reserve that created the 21 trillion, because the reality is the money couldn't have been created without the complicity of both players. So they're both guilty, and there have been no explanations and no response to the questioning of how much money really exists, other than for the establishment to basically tell humanity to take a hike by introducing FASB 56, which takes the U.S. federal government's books dark.
Right.
And that's inappropriate. And frankly, in my view, that apart or opposed to the four former Fed chairmen saying that Fed independence could endanger the Fed, I actually believe it's the lack of response or a credible response to the missing 21 trillion that's endangered the life of the Fed and the credibility of the U.S. Treasury more than anything that has ever occurred. So let them smoke some of that, is my response.
Follow-on question there, number 2 from you, Sinclair, is will central banks be able to restore confidence by buying everything they can, or will that be the straw that breaks the camel's back?
Well, it's worked so far for the European Central Bank under Mario Draghi, because he's pretty much bought everything that isn't nailed down, and he's probably bought a lot of things that are nailed down. I don't think that's going to work in the context of the Federal Reserve, because I don't believe the rest of the world is going to tolerate having the U.S. dollar as the world's reserve currency if that action is undertaken. That's my view on it, and I guess we're going to have to wait and see how it plays out, because there's no doubt in my mind that's where we're headed.
Related question from Acme Jetpack. That sounds like a fun thing to own. Everyone wants to know, quote, when. Personally, being of the mentality that the central banks are not painted into a corner, that the collapse is a planned event, if that sentiment is shared by Rob, what are some signs to look out for to know it's close at hand?
Well, to me, it's a work in progress, and we're seeing we're seeing it play out in real time in front of us. The very fact that four ex-chairmen of the Federal Reserve would be writing an op-ed basically ruminating about the day when the dollar is not the world's reserve currency. Mm-hmm. If that isn't some smoke, and the room is filling with smoke, but if that isn't the notion that the dollar's days are numbered, I don't know what is. And when you see this much or smell this much smoke, usually there's a flame somewhere. And I do believe that the dollar's days are numbered. I really do.
This is a heartwarming question from Sally Maynard, who says, hello, Mr. Kirby. I'm a Canadian senior. Low income, but happy and healthy. I can't afford to buy precious metals, so I go to yard sales and buy cheap silver jewelry. I have 6 pounds of sterling. Is this a valid way to stack silver as I buy it dirt cheap? Thanks and God bless, Sally.
Absolutely. It's a tremendous way to buy melt silver or junk silver. And I'm an avid garage sailor myself. And over the years, I've bought a lot of gold and or silver at garage sales at remarkable prices.
Yeah. I have to say that last time we had a garage sale here, and some of our viewers will remember me mentioning this, our whole neighborhood was having a big garage sale. We prepared for weeks and got everything all out there. And the night before the sale, the real sharp buyers come around, even though the sale isn't open. And there was 4 things that they asked about. They said, do you have guns and knives, gold and silver? And it's like, that's interesting.
Well, I guess they're probably avid watchers of your show, Dunnigan, and they're prepping ahead of time.
Maybe so. Better be 7 years early than 1 day too late. Next question is from They Are Lying to You, who asks, Rob, how do you see Brexit, if it actually does happen on October 31st, affecting the pound and euro currencies, which in turn have a knock-on effect on the dollar and other world currencies, etc.?
Brexit is not going to be a positive experience for the pound. I think we know that. Whether or not we actually get Brexit is another question altogether. It seems that the political powers in Britain, no matter who the leader is of the Tories or any other political party for that matter, seems to be very reluctant to actually take Britain out of the European Union without a Brexit deal. And it doesn't seem that there's a political climate in Britain right now to have a negotiated deal with the European Union, one that both sides can live with. So, I mean, to me, if there's going to be a Brexit, it's going to be a no-deal Brexit. And I don't know if there's political will enough in Britain to actually, let's just say take it home, to actually do that. So, I mean, my guess is there's probably going to be another nationwide election in Britain, and very likely where it'll end up being the national election in Britain will very likely end up, in my view anyway, being another referendum on whether the Britons want Brexit or not, and I guess really ultimately the outcome is going to be determined probably by another federal election in Britain. That's my guess.
All right, here's one from Russia. Pavel Signyuk says, I said that name wrong. Pavel Siganuk says, in the last 100 years, real estate to gold ratio was the lowest in 1980 and 2011. I guess that's because those are peaks in the gold price. If it means that we see a rise in gold price back to the 2011 levels, what does Rob think? Could we see a break of the 1980 and 2011 lows for this ratio of real estate to gold?
Oh, anything's possible. I have long said for years, many years, I have said I think the day will come when you will not be able to purchase an ounce of physical gold with fiat money. So, I mean, the implications of that, real estate is denominated in fiat money. And to boot, real estate is also typically bought with leverage, as in borrowed money. Mm-hmm. Whereas physical metal, it's a cash and carry business. People who own an ounce of gold usually don't have a loan against it. Real estate that people own typically has mortgage associated with it. And I could see a world where we have a hyperinflation where real estate maybe goes up in nominal terms, but nothing like the way precious metals could go up in nominal terms. So, if you're at all familiar with what happened during the Weimar hyperinflation in Germany, the price of real estate did go up in nominal terms, quite significantly. But people who thought they were going to repay their mortgages in devalued dollars, they got a surprise along the way, because the powers that be in Germany in the day, they changed the rules where they pegged mortgages to the price of precious metal. So even though you had a mortgage that said you owed, let's just say 200,000 something, that got very quickly indexed to metal. So you didn't really have to repay only 200,000. You had to pay multiples of that, because it was all keyed to the price of metal. So can I see real estate underperforming? Yes. We've had a lot of years. I really 20, 30 years now, or almost 30 years, where real estate has outperformed. And anybody who thinks that real estate never underperforms isn't old enough to know the difference. So I've seen real estate underperform, and when real estate underperforms, it shows no mercy. And I would say to you, or I would suggest that precious metal has probably had the worst run in the last 8 years that it's ever had in my experience. And it's maybe time. Things in life tend to move in the, like a pendulum. And I could easily see real estate underperforming for a significant period of time while precious metal outperforms dramatically. So that's the way I would answer that question.
The reason I cracked up in the middle there was not even before you said about they're not old enough. It was also about with all the fuss that politicians and bankers make when anybody brings up the concept of gold standard, whether it's Representative Ron Paul or anybody. It sounds like in the crisis, it becomes very convenient then for them to flop over and go, oh, I guess maybe that's not such a bad idea after all, just for the short term, till we can keep track of something in something that you can actually trust as a measuring stick, so that we don't lose out here. So,
what I find amazing, Dunnigan, is people who make the commentary when people talk about returning to a gold standard. They say we could never do that. There's not enough gold. So. Anyway, it's not the amount of gold that's the problem. It's the price of gold that's the problem.
That's right. So this is a little bit related to that sort of a reset that you talked about. Second question from the same asker, Pavel. He asks, Jim Sinclair and Bill Holter in their last interview mentioned that the price of gold first could rise to approximately $1,700 level by market forces, but then it would be repriced by a reset to $10,000 or any other such price. Pick a number. Could Rob expect such a scenario?
Well, I mean, my commentary or my comment just a little bit earlier was that there will come a day where you cannot buy an ounce of gold with fiat money. So I believe, and I maybe should knock on wood when I say this, I hope I live to see that day. But, I haven't had a great year. But I think most of us are going to live to see a day where you cannot buy an ounce of gold with fiat money. That's my prediction, and hopefully I live to see that day. Not because I want that to occur, but I want to live that long, and I don't think it's going to take that long for that to happen.
Well, we want you to live a long time too, Rob. This question comes from ABCD, who asks, 1, is Canada any better off than the U.S. in terms of surviving a financial collapse?
No. Probably. I don't know if I want to say worse off, but I don't think we're any better off. I mean, the Canadian dollar is hitched its wagon completely to the U.S. dollar. So whatever's going to happen to the American dollar is going to happen to the Canadian dollar as well. In terms of deficit, the Canadian government does not have as big a deficit on a per capita basis as the American government. But, just remember that in Canada, we have, I live in the province of Ontario. Toronto, Canada is in the province of Ontario. And the province of Ontario has a debt that, we have I think 9.5 million people living in Ontario. And California has a population, I believe, 10 times what the population of Ontario is. And Ontario has just as big a debt as California. So our provincial debt, when you add it to the federal debt, is extremely onerous. And, Canada's not in a great financial position, period. And the other thing, Canada also, let's just say probably somewhere in the magnitude of 70 to 80% of our exports are to America. So Canada's economy is export-led. And if our biggest consumer of our exports, being America, goes into, let's just say, shock, we are not going to have customers for our output. So we are overly reliant on American consumers nationally, and and if anyone's been paying attention, our relations with China aren't very good these days. And China is another very large global consumer of everything. And I don't think we're on their Christmas card list this year.
ABCD asks a follow-up question number 2. Mark Faber says they can kick the can down the road for another 30 years before the collapse happens. Do you agree?
No, not in the least bit do I think the can be kicked down the road another 30 years. I question whether it can be kicked down the road another 30 months and maybe another 30 weeks. But I think we're very, very close to some sort of a climactic event coming to the financial markets in the very near term now. And I think this is being evidenced by the likes of the commentary and the op-ed referenced earlier, where 4 former chairmen, one of them being a chairwoman of the Federal Reserve, making the commentary that the dollar's days as the world reserve currency could be coming to an end. So very prophetic words coming from people of that ilk.
This is from Denmark. Lufabassen asks, he says, my name is Nick. Question for Rob. Deutsche Bank has been raided 2 times by SWAT teams in the last 5 years from what I remember, but I've never heard the outcomes of these raids. Do you think it could be to cover up their crimes and basically let them continue with their shenanigans in a somewhat clean slate after each raid?
I would say to Nick respectfully, we have seen the outcome of the raids. The outcome of the raids has been the absolute withdrawal of Deutsche Bank from the precious metals arena. Deutsche Bank used to be one of the key players in setting the price of silver on a daily basis in London. They withdrew from that, and Deutsche Bank has been basically brought under the reins of BaFin, which is the German financial regulator, and has basically been, I'm going to say, reprimanded in a very, very severe way for their being engaged in the basically the support of the dollar through being a heavy duty player in interest rate derivatives predominantly, which is business that has been largely conducted with the U.S. Treasury. I mean, I know from people that let's just say people who I know who are very close to German regulators, when Deutsche Bank was raided a number of years ago, the regulators went in and freaked when they found out how much business Deutsche Bank was doing with the Exchange Stabilization Fund in America. And that's when German bankers at Deutsche Bank were reminded they are not an American bank. They were indeed a German bank. And as a German bank, they shouldn't be engaged in that kind of activity. And this is the kind of activity, you see, the amazing thing, what has brought Deutsche Bank to its knees is not something that Deutsche Bank has done that's off the wall. What Deutsche Bank is engaged in and what they have been engaged in is the same crap that JP Morgan is engaged in, Citibank is engaged in, Bank of America is engaged in, Goldman Sachs is engaged in, and Morgan Stanley is engaged in. It's the exact same crap that all those American institutions have on their books is what Deutsche Bank had on their books. The difference is the American banks report to American regulators, and they're doing the work because what they're effectively doing is they're implementing U.S. monetary policy through the books of those American institutions. And Deutsche Bank forgot that they have to be answering to German regulators and not American regulators. And so the difference is who they report to. And that's why Deutsche Bank has found itself in so much trouble, because German regulators were appalled when they found out the degree of complicity of Deutsche Bank engaged in, let's just say, dollar support activities or dollar friendly activities that they had no right being engaged in, basically as Germany's flagship carrier in banking. So I mean, that's the difference. And it's just so why? And then people will ask, well, then why isn't Morgan or Citi or B of A or any of these American institutions found themselves in trouble? Because American regulators don't regulate. German regulators do regulate. Okay? And if anyone wants to be paying attention to or reading the tea leaves, it was when Deutsche Bank first started getting investigated by German regulator, financial regulator BaFin. That's when German-American relations got strained, because it was in this time frame that German regulators first asked if they could audit their gold that was being held in trust at the Federal Reserve in New York. And the Federal Reserve said to Germany, piss off. No, you can't. We don't have facilities appropriate for you to come and audit your gold, which is a bold-faced lie. And then after that happened, the Germans said, okay, well, if we can't come and audit our gold, maybe we can just have some of it back. And then they were told no again. Okay, and then you move along the timeline a little bit more, and then suddenly Volkswagen found itself in hot water with the Environmental Protection Agency over their diesel engines. And $17 billion later in fines, and a week after Germany opened a new engine plant in Russia, the EPA came down on Volkswagen like a ton of bricks. So let's just say this has left a very bad taste in German leadership's mouths. And this is why Germany's relationship with America is very strained. And this would also be a part and parcel as to why the Germans are reluctant to be active members in the most recent round of American adventurism militarily in the Middle East, and not wanting to play the game. And this is why Germany is cozying up to Russia and China, economically speaking. And people not paying attention to these developments, you're missing a big part of the story that's going on right in front of your eyes, whether you like it or not. So anyway, that's my reply on that.
We have a question from You Crazy, who says, hello, a company I follow explains that the gold-silver ratio, or silver outperforming gold, is irrelevant as the ratio is measured in dollars, and even if silver outperforms gold during a breakout, it wouldn't make much difference as it would be in useless fiat. I don't follow this logic, as it is my understanding that should silver and gold be allowed to break out and the ratio revert to the mean, I would have a favorable trade back from silver into gold. Thoughts?
Well, in my view, the gold-silver ratio, which today is at 88-1, is absolutely broken and arbitrarily set by people who have control of a broken system and a fraudulent system. So for every ounce of gold that is mined from the Earth's crust, 8 ounces of silver come out of the Earth's crust. Silver tends to be consumed in industrial processes, which means that, and then to boot, virtually every ounce of gold that's ever been mined in the history of mankind is in above ground stocks, whether it's jewelry or bar form, in one place or another. Silver tends to get consumed because electronic applications and so many industrial processes require small amounts of silver per application. It's not, and the price has been held so arbitrarily low for so long that instead of this silver that goes into industrial applications, instead of it being recycled and reused, it ends up in landfill. And the reality is there are fewer ounces of silver in above ground stockpiles than there are of gold. And I think this argues very strongly for a day when the paper markets in both gold and silver are completely discredited. There will be a great reversion to something approaching the, I'm going to say, Mother Nature's natural ratio. I'm not saying it goes necessarily to 8 to 1, but maybe it goes into 10, 20, 25 to 1. I mean, if silver were to go to 20 to 1 instead of 88 to 1, I mean, you know, that would put the price of silver today at what, you know, I mean, a tenth of 1,500 is 150, and you know, so at 20 to 1, silver would be $300 an ounce. Maybe I've got my math wrong there. I don't know. Anyway, it would be, let's just put it this way, it'd be dramatically
75,
higher.
75, yeah, right.
Yeah, sorry. But it's a much bigger number. Much bigger number. So, anyway.
Well, so their whole point was not because they were questioning people who have wanted to dispute that, say, even when we talk about it in terms of dollars per ounce. But your point is that just the ratio of...
I'm talking about how many ounces come out of the Earth's crust and how many ounces are available to be consumed above ground.
And their point was how many ounces you can swap one for the other if you were to arbitrage between the two. Yeah.
You know, in my view, the ratio should be something a lot closer to 8 to 1 than 88 to 1.
Right.
I'm not saying it should be 8 to 1, but I think it should be dramatically lower than 88 to 1. And what the right number is, I mean, to me, Mother Nature's telling us it should be 8 or 10 to 1. So, and I don't like to argue with Mother Nature.
Cosmic Singularity asks, I would like to ask Mr. Kirby, for a U.S. citizen living in the United States, would owning American gold eagles be more advantageous than owning, say, Canadian gold maple leafs, should an economic crisis strike within the next 24 months? I'm trying to determine whether or not to sell my maple leafs and then purchase gold eagles with the proceeds.
I would not do that. To me, quite frankly, it's irrelevant. I mean, the Canadian gold maple, I believe, is more pure.
That's 4 nines, yeah.
Because, but at the end of the day, both are universally accepted in trade around the world. So you're going to incur costs to sell. I mean, if you currently hold gold maples, and if you want to trade those in for, you know, gold eagles, I think you're going to incur a cost to do that unless you know somebody who will do it on an even up basis. I wouldn't incur costs to do it. So that would be my answer there.
Fred Flintstone asks, please, you are well. I have precious metals stored in 5 countries out of the bank. What is to stop central banks that all work together doing us over worldwide?
Nothing. They've been doing it to us, you know, they've been doing it to us collectively for, you know, better than 100 years now. And if you think it's going to stop, I think you're sadly mistaken. And if anything, it's going to get worse. So, you know, you want to own precious metal, in my view, you want to own it as anonymously as possible. And if anyone asks you how much precious metal you have, you just literally say to them, what metal are you talking about?
We have that answers the question from David Dalton, who asked, no, this is a different one. Hold on. Yeah, Wellvi1 asked, how much gold do you have? And that's the answer to that question. Okay, Stefano Manfreo asks, what is the reason why countries like China and Russia would deliberately understate their official gold reserves?
Because, I mean, a thinking person would quite possibly reason that when China reaches a certain threshold in sovereign gold holdings, they might very likely or possibly say, we are now going to back our currency with gold and revert to a gold standard. So if the world is kept guessing as to exactly how many tons of gold China owns, people are going to be somewhat mixed up or confused in making that kind of a prediction or determining whether it's viable. So I guess to me that's a good answer to the question. I mean, nobody likes to admit how much gold they own. It's like, it's no one likes to admit what, nobody wants to in the international community. If you'll notice things, no country wants to admit how many nuclear weapons they hold.
That's what I was going to say. It reminds me of a question of, who was it, Lao Tzu, The Art of War, or Machiavelli, The Prince. So it's like, it's a weapon.
It's a weapon, or it can be a weapon.
It's a asset of advantage.
Yes, so you never divulge, your exact holdings to anybody. It's not to your advantage to do so, unless you're going to want to dis or misinform them, in which case you're not getting straight goods anyway.
I think you already answered this one obliquely, but I think you can go ahead and hit it off at the tee here. David Dalton says, Mr. Kirby, is there any place you can buy gold or silver on credit, and would this be advisable to lever up?
Well, I don't know really any financial institution that would, if you went in and said you wanted a loan to buy gold, that they would actually give you the loan. I guess to a point you could go in and say you want to take out a mortgage and you want to buy a boat. You want a mortgage on your house to buy a boat, and then you don't buy the boat, you buy gold instead. I guess technically you could do that.
Or you could just put it on a charge card, then you owe the debt. Yeah.
So I mean, but you might encounter some problems when the bank says that they'd like the registration on the boat to list it as
collateral,
collateral for the loan. I mean, precious metal is a very difficult thing to finance unless you're of extravagant means. But if you're of extravagant means, you're going to buy gold as a diversification tool anyway, which means you're very likely not going to be leveraging it. That's why banks hate gold. If you haven't cottoned on to that yet, banks hate gold because they don't make fees from it, because typically people don't borrow money to buy gold. And, when banks lend money on property, they know the address where the property is, so it's very easy to keep a lien on it. But gold has a funny way of disappearing when it's threatened. So, keeping, the only way I guess really a bank would want to let you borrow money to buy gold would be if you kept it in their bank. But then you'd probably find out that the gold, much like the cash you have in the bank, isn't really yours either. So there you go.
We've got one last question here. It's a provocative one from George West. A COMEX contract is really an exchange contract, metal for USD. We always hear about the shorts that push down the price when they have no metal to deliver. But the longs do not have the cash to deliver either. They are in on margin. What would happen to the prices of gold and silver if the longs were required to prove up cash holdings sufficient to take delivery before they could enter a long position?
Well, I mean, that's a double-edged sword. So I mean, if the longs have to prove they have the cash, you can't impose that one way. So if the longs have to have the cash, then the shorts have to have the metal. So and then in which case the COMEX system would break down, because it would show that it's a fraudulent system, because neither the buyer nor the seller have the resources to actually fulfill their commitment. And then that would mean that gold would become a cash and carry commodity. And if gold becomes a cash and carry commodity, the price would go to hundreds of multiples of its current price, because people wouldn't be able to buy gold because it would discredit the currency. And that would fulfill what I was talking about earlier. That would actually fulfill my prediction that you can't buy an ounce of gold with fiat money, because there's way too much fiat money in existence for the scarce supply of physical metal there is in the world, and it would be totally out of kilter. and the price of gold, would never reach an equilibrium. I don't think the price of gold, if gold went cash and carry, and these exchanges where they trade in paper ounces were discredited and fell by the wayside. I don't think a price at $100,000 would make people want to part with their physical ounces. I don't think a price of $500,000, because like wheelbarrows of cash would not buy you an ounce of gold. And people who think that that's far-fetched, I mean, you don't know history. This has happened. This has happened time and time again in the history of fiat money. Every fiat currency that's ever been invented by mankind, they've all failed. They have a perfect record of failure. And fiat currencies from A to Z, literally, assignats to zlotys, fiat currencies have failed. And I mean, you can actually go and research this on your own. Google fiat currencies that have failed in the history of mankind. And there's hundreds of them that have failed. Hundreds. And the dollar will be no different than the, perfect record of failure that other fiat currencies have had before it. It will fail. The only question is when. And because fiat money is a game of confidence. And with the amount of US dollars that have been printed, it's not going to keep the public's confidence indefinitely. And I mean, and how do I know that? I just direct you to the kind words of Messrs. Volcker, Greenspan, and Bernanke, and Yellen, because they're telling us. They're telling us that the day is coming. And how do they know? Because they know how much money's been created, and they know that international and global confidence in the dollar is waning, and they know how big a fraud the dollar really is. So they know, and when they're writing this and putting it and publishing it in the Wall Street Journal, I think people should sit up and take notice.
Well, Rob, we're out of time for this visit. We've got as many questions still unasked as we were able to get through in this hour. So we're just looking forward to the next time that we can have you on again soon. And I'll have the pleasure of meeting up with you in person later this month. That'll be looking forward to that. And just wanting to remind everybody, guys, to keep us going and being able to do these videos, please click the subscribe and the like button down below. Also, make sure you visit patreon.com/reluctantpreppers, because your subscription, even as little as $1 a month or more, can really help support us and keep us being independent of censorship, and so we can bring you whatever hard-hitting news we need to. And one of those that you like to get is Rob Kirby. Rob, as always, our viewers really appreciate you joining us here on Reluctant Preppers.
Been my pleasure, Dunnigan.
It seems so hard to order. Who can I trust, and how do I even start?
Oh, you just go to sdbullion.com/rp, pick out whatever gold or silver you want, add it to your cart, you can check out, and it's on its way. And they're A+ rated by the Better Business Bureau.
Wow, it's that easy?
Your first ounce of silver is at spot price, and you get free shipping on any order over $99 at sdbullion.com/rp.
After I order gold or silver, how can I trust I'm going to get it? And I don't want everybody to know that I'm ordering gold and silver.
Oh, it's okay. It's fully insured, it's trackable, and you have to sign for it, so nobody else is going to get it but you, and it comes discreetly packaged. If you order a small amount, like maybe gold, it'll probably come in a box that looks something like this. Okay. And if you order a large amount, maybe like silver, it'll come in a box that looks something like this.
Wow.
But it doesn't say gold or silver on there. It might say something industrial or something else like that, but nobody's going to know what you ordered.
Oh, that's great to know.
Your first ounce of silver is at spot price, and you get free shipping on any order over $99 at sdbullion.com/RP.
If I own gold or silver, how will I ever be able to spend it?
Oh, sure. Well, consider good times or bad times. Like in good times, you can sell it back to the same place you bought it from. sdbullion.com/RP will buy it back at the best price guaranteed on the internet. You can take it to a local coin shop and get cash in your hand, completely anonymous. Some people you know may be willing to take gold or silver coins in exchange for goods or services. Now, in bad times, when things have really fallen apart, time after time in history, people have found that in hard times, gold and silver really does come through as something that people recognize as value even after everything else has failed. Your first ounce of silver is at spot price, and you get free shipping on any order over $99 at sdbullion.com/RP.
What if gold or silver drop in price after I order it?
Well, everything fluctuates with time, but nothing has held up longer and better than gold and silver throughout all the changes that have happened in history. Your first ounce of silver is at spot price, and you get free shipping on any order over $99 at sdbullion.com/RP.
What good does gold do me anyway? I can't use it for anything.
Well, I think I found a form you might appreciate.
Wow. That's beautiful. Wow, I can wear that just about anywhere.
And you can take it with you through airport security and across borders. It's small and compact and lightweight, and you can even hand it down through generations. Your first ounce of silver is at spot price, and you get free shipping on any order over $99 at sdbullion.com/RP. Hey, Reluctant Preppers. If you haven't heard, we've already started our monthly 1-ounce U.S. Silver Eagle thank you gift to one active Patreon subscriber each month, signed by your host, Dunnigan Kaiser. And you don't want to miss out on that.
Please help us grow by subscribing today at patreon.com/reluctantpreppers.